point of control, I just showed you that. So what we're going to do is click apply, and then we're going to click OK. Now, this right here, if you want to see past history data, you have to come up here to the data series, and then you have to click on tick replay. Now, if you choose 5 days, it could take a tremendous amount of time to go ahead and load it up. What I like to do is just choose bars and maybe go to 200 and then click apply and then click OK. And it's going to say loading tick replay, and then it's going to say calculating. And what that's going to do is just go back 300 minutes. Now, as you can see here, it kind of loaded up. Now, and then the delta here just shows all green. There is something with how I get the tick data because I'm getting it from Rhythmic or whatever data feed that you have connected with in NinjaTrader. Now, I've tested this with Rhythmic, with Tradeovate, and it seems like it works. If this does not work for you, let me know what data connection you are using. But there is sometimes these are not accurate. The green and red dots and the bars are not accurate on the past history data. I just use them as a guide, as a reference. Like here we had stacked and balanced area, and then right here as well. But let's go back here a little bit to about 9:49. Okay. Let's go ahead and click play. And then as you can see here, let's go ahead and kind of reduce this down a little bit. As you can see here, this is the delta box. Right here, that delta box is this right here, enable delta analysis. Now, the CVD is at the end of it. That is the cumulative volume delta for all of this. Now, this one right here is the current delta for this current bar. This one right here is the previous bar, and then it goes back. Now, when I choose the delta down here, delta settings, delta look back bars is 9. That 9, I choose 9, but the CVD is only calculating for the past 8 minutes. Let's say I want to know the CVD for the past 5 minutes. Let's say I do 6, and then I click apply. The CVD is going to be for the past 5 minutes. The CVD goes off of this one, 1, 2, 3, 4, 5. So the past 5 minutes, it's negative 217 delta. And then, of course, the current one is this right here. Let's go ahead and click play. So that is the delta analysis down here. Now, I'm going to be working on this and then changing. I'm going to be adding the cumulative volume delta to the current delta and add that in. That'll probably be on the next rebuild. I need to go over how the stacked and balanced areas are. Now, the stacked and balanced areas, we have enabled imbalance detection. The imbalance ratio is 5. So that means it has to trade 5 times more imbalance. It has to be more buyers, 5 times more buyers than sellers for it to be bullish, or if it's going to be bearish, it has to be 5 times more sellers than there are buyers. Now, the stacked levels required. I do not have the tick level data so where you can crunch it down to like 2, 3, 4, 5, 6, 8 ticks. That can be in a future release. But right now, I have stacked levels required. I have 4 ticks. So from like 25,750 to 25,751, if all of those were 5 times, all of those tick levels, those 4 tick levels, if all of that was 5 times more than the other buyer or seller, then it's going to show up as an imbalance. So the imbalance ratio I have set to 5, and the stacked levels required is 4. Now, in the future, I'm going to go over an order flow class, and then I'm going to upload that video and go into more detail about order flow so people understand how order flow actually works. So that's what I have here for the imbalance ratio of 5, and stacked levels required is 4. this candle right here, as you can see here, we had 1, 2, 3. We had 3 stacked levels. In that past minute, we had 3 stacked levels of 5 times more buyers than sellers, and it was 4 ticks. 4 ticks will get you 1 green line. And then we have a double stack right here, and then we had a triple stack. Now, the reason this one's not showing all the way across like the other ones is because we traded through it. Once we trade through it, then it's going to go away. As you can see here, we traded through it, and then it's going to cut it off. And then right here, we had a sell stacked imbalance. Right here was a sell stacked imbalance. And we had right here, we had 5 times more sellers than buyers at this level of 4 ticks of 5 times more buyers than sellers. And then we had a double stacked sell imbalance right here, and we kind of drifted down. So right here, we have a triple stacked imbalance, buy imbalance area right here. And as you can see, we kind of moved up. Okay, so now we're going to go over enable big trade detection. This one is pretty big, and I use this constantly. Every day, I always use this with the imbalance detection area and with the delta analysis. So when you enable this, this is going to show bubbles and dots of big trade detection. Now, you need to configure this for large trade thresholds, big trades, and very large threshold. Now, a large trade threshold of 20, and then a very large trade threshold of 30. Now, what this does is that it's not calculating all the contracts that are coming through. This is one order. So if one order goes off with 20 contracts that are filled for one order, then it's going to show a dot. Actually, it shows between 20 to 30. So if there's like 25, if there's a trade, one order of 25 of a buy order, then it's going to show up as a dot. Now, if it's a very large trade threshold, 30 or more, it could be 30, it could be 100, it could be 200. It's going to show up as a big green circle or a big red circle. So right now I have it set to 20 and 30, and that is good for the NASDAQ. That's what I normally use. So let's go ahead and enable that. This blue dot was a big trade. It was between 20 to 30 contracts in one order, and that was a buy order. And of course, the buyer got caught on the wrong side, and then we kind of sold off. Now, we have a red circle here, which means there was a large order, one order of 30 or more contracts that someone tried to sell, and they got caught on the wrong side. And then they eventually got rewarded down here. Right here, we had a stacked sell imbalance. And the stacked sell imbalance right here, what I like to use, as you can see here earlier around 11:15, we had a double stacked buy imbalance and we kind of ran up. Now we kind of drifted down. And then what I like to use is these stacked buy imbalance areas as support. Now we had a sell imbalance, but they could not break through. And once you see that, that's kind of bullish because we can't break through this area because buyers are defending it. And as you can see here, there's a blue dot. That means there was between 20 and 30 contracts in one buy order. And what you can do is, since you know that is a large buyer, when that candle closes, you can get in here and possibly ride it up to about this area and get about 6, 7 ticks. Or you can just ride it up, take a little bit off, and then try to get yourself a runner. That is a buy order of 20 to 30 contracts. Now, if we look here, this area we had a double stacked buy imbalance. Now, we ran through the first imbalance area, but we kind of, this one gave us support and we kind of moved up. This is the type of trade that I really like to look for, is a double stacked buy imbalance. So there's more buyers than sellers. 5 times more buyers at this level, and then 5 times more buyers at this level, and we have a green circle, which means that was one trade of 30 or more contracts in one trade. That's very bullish. And when you see that, that means you can go ahead and get in. That is one of the biggest things that I use is the imbalance area and the big trade. I just want to go over the settings that I use, which is enable big trades detection. And then the big trades large threshold is 20, and the very large trade threshold is 30. That's for NQ. You'll have to change it if you're trading ES or silver or gold or anything like that. So just remember the large trade threshold. The first one is between 20 and 30 contracts. Well, between 20 and 29 contracts in one order. And then the very large trade threshold is 30 or more contracts. That's the big red or green circle. The last thing I want to go over is the persistence. Enable order flow persistence. Now, order flow persistence, what this does is right here under persistence. I normally like to keep it around between 2 and 10. Let's do 5 so we can really get some persistence trades shown so I can explain it to you how it works. Now, persistence duration ticks. That is set to 2. What that means is that when you tick up, that is a buyer. Okay. Now the minimum volume per level is 5. So if we have 5 contracts and it ticks up, 5 contracts are buy and it ticks up, it has to tick up a second time with 5 contracts. So it has to tick up with 5 contracts. Then it cannot tick down as a sell. It cannot tick down. It has to be 2 ticks up. So it has to tick up once, tick up again with 5 minimum volume for each tick for it to show. So if we tick up and then we tick down, it's not going to show. If that makes sense. So at 3 ticks, it has to tick up 1, 2, 3. That means it has to be aggressive buyers that are slamming in and moving the market up. Tick 1, tick 2, tick 3 with a minimum of volume of 5 per 3 ticks. So it has to be 15, if that makes sense. So let's go over that, and this right here is a persistent tick. That means if we look at the settings, we have it set to 2 and 5. That means it had to tick up once and then it had to tick up again in order for that to show. That is telling me that is an aggressive buyer. There are aggressive buyers that are moving the market. Right here is aggressive sellers. That was 1, 2. It happened twice. So there was 2 ticks of moving the market down. Then there was another 2 ticks of moving the market down. That is telling me there are aggressive sellers. And we kind of trickled down a little bit. So what you're going to have to do is you'll just have to play around and see the settings that you like to use. Okay, let's look at how all this kind of comes together. So if we look at the settings, I'm not showing the point of control, but I am showing enable imbalance detection. That gives you the stacked imbalance areas, enable delta analysis, and then enable big trade detection, and enable order flow persistence. Now, the imbalance ratio is set to 5, so it has to be 5 times more buyers or sellers, and then it has to be stacked levels required of 4. So that just means that, let's say at 25,900, it has to be 900 and a quarter, 50, 3/4, and then a whole to 4 levels. If it's 3 levels, then it's not gonna show a stacked imbalance area. And the delta settings, we have delta look back bars of 6. And then for the big trades, the large trade threshold is set to 20 and the very large trade threshold is set to 30. So the blue or yellow dots are your first one, the large trades. And then the big green circles, red circles are the very large trade threshold. Now the dots show between 20 and 29 contracts. So it could be 25 contracts. And it has to be 25 contracts for one order. And then the very large trade is 30 or more contracts in one trade. So that's what I have here. Now let's look. This is on the 29th. At 9:30 we opened up and then we had a big buy right here. So we had one trade that had 30 or more contracts they were buying. Now also if you look at this, let's go ahead and bring this down. This is very interesting because we opened up at 9:30. We had 30 or more buyer contracts right here, and then we kind of moved up. Then you had persistent buy-in that kept ticking up. But if you look, the persistent buyers in that large big trade right there of 30 or more contracts did not get rewarded. We closed below. Then on the next 1 minute candle, let's look at this. That was 9:32. So at 9:32, we moved up and then we kind of sold, drifted back down again. Then you had persistent sellers. As you can see right here, you have persistent sellers. Now, if you are in a buy right here and you start seeing a red candle with persistent sellers, you need to rethink your situation. And then we had large buy right here of 30 more contracts, and then another large buy. And then you had a blue dot of between 20 and 29 contracts. So the buyers were trying to get in and push the market up, but they could not get it done. Then this candle right here, we sold off. Then we had persistent selling of it. And the persistent selling I have set to persistent duration ticks of 2. So it has to be 2 ticks down with a minimum of 5 for a volume per tick down in order just to get one of those bars. And but we got multiple, and then we had it looks like we had an imbalance area right there as well. So we had persistent selling, and then these buyers are underwater, so they're gonna have to start they're gonna have to start selling and cut their buy orders. And then, as you can see, when that happened, we just kind of cascaded down, and then we got a nice little run down here. So, how many ticks was that? That was roughly about 70 point down. So it has 70 point move down, and then you had a I'm sorry, you had a yellow dot that showed there was a large sell order right there with persistent selling. So you can go ahead and stay in the trade as it starts moving down. Now, once it starts moving down, and then you get to right here, and you had persistent selling, but then you had a large buyer right there of 20 to 30 contracts, large buyer, and it started moving up. Then you had persistent buying. Then you had persistent buying with another large buy order. You might want to go ahead and start locking in some of your profits. Now, this right here, as we sold off, this is what I like to look for. We had persistent selling moving down. We had a sell stacked imbalance area. So that's telling me that I can go ahead and get in somewhere around in here, and my stop could be above the stacked imbalance because more than likely, if they break through that, it can move up. So, and it didn't, and we kind of moved down here, and you might have gotten yourself about 50 ticks. So this was a pretty rough day. The 29th. No, that was the 30th, I think. Um, so that is everything put together. And as you can see here, another thing that I like to see is when we're in a downward move and we start getting persistent buying, I don't jump in because we are in a downward motion. What I do like to do is start seeing stacked sell and balance areas right here. We had a stacked sell and balance, but we kind of traded through it. That's why it kind of went away. And then we traded through that one. And then we had one up here, sell and balance area. And then we had another one here, right here, but we kind of traded through that. But what I like to do is see large sell orders like this right here, a lot of large selling orders, and then at least two or more sell and balance areas, and then you can go ahead and jump in. Now let's go ahead and just run through this at 100x speed. As you can see here, we had large buyer right here with persistent selling right here, and you had a stacked buy and balance area right there because I can see that green line, then that green line there. But we could not break through this resistance area of all this imbalanced sell. And then as you can see, we couldn't break through and we eventually sold back off. So you can use these imbalanced areas as support and resistance. We have large buyers coming in. Large buyers coming in. They're trying to push up the market. We have a large seller that is underwater right there. And then we have another large seller right here. And we just cannot break through this area right here. So we just keep drifting off. Now, this right here, we have a large buyer right here. And this is basically a doji candle. We had a large buyer right here. We had persistent selling at the bottom of the candle there. Now, what I like to do is once we start trading through, once you break the low of that, that large buyer is underwater of 30 or more contracts. Now, in a downward market like this, and also this large buyers right here, these large buyers, all of them are going to be underwater. All of them, all those buyers, once we start breaking this, what I'm expecting is that they're going to just go ahead and just cut those orders because you got 30 there, 30 there, 30 there. You got 90 contracts plus you had some buys there's and some buys there. So you probably have 100 contracts of buy orders and they're not getting anywhere. And you break that low right there and you break this low, it just moves right down. You break that low and it starts moving right down. You get another buy. Maybe you want to cover right there and get yourself about 20 points. This is how I like to use this. Now let's keep going and run through this. It's around 1040. Triple stacked sell area had large sellers with persistent selling right there. And then you had a seller, but then kind of drifted up and keep moving down. So you had large seller. Problem is that large seller was a little underwater, but you had support with these large sellers right here. And that's what I'd like to look for is once I see a large seller, I'm like, okay, you had one way up here. So the momentum's down. Then you got another one right there. You want to hold. So once it starts drifting up and you're like, well, if we start getting above this area, they could go ahead and cover and we could probably move back up. But we had a large seller step in. It could be the same institution that's moving the market down, but then we had persistent selling. Once we broke this low right here, then we came right down. Once we broke this low right here, we came right down and we started coming down here. And once you start seeing that persistent buying, you can get out for about 40 points. That's kind of like how I like to use this. I'm not going to go over any strategies right now. To the T. I'm just giving you some trade ideas that you could possibly do yourself. But that's how I use this indicator for stacked and balanced areas, persistent buy-in, large buyers, large sellers. I'm looking at the cumulative volume delta. Is it moving up, going down? Well, obviously it's moving down. It was moving up there for the past 5 minutes, probably up in this area, was moving up. And then we started drifting back down. Now, this right here, this is what I like to see. And are these sellers going to get caught? Are these sellers going to get caught and we have a short squeeze? Okay, what you can do, because it looks like we're into a chop area. So we kind of drifted down. We drifted down. I mean, we drifted down quite a bit. I mean, mainly in a drift. This thing really moved down from like here to here, roughly about 270 points. But this is what I like to see is we start moving up. We break this area right here. Now, you had large sellers right here, these large seller institutions. More than likely, they took some profits and then it kind of moved the market up. I have no idea. That's what I'm just assuming. And then we have right here is this is what I like to look for right here. We've got a stacked and balanced buy and balance area. There's 5 times more buyers than sellers. We have 1, 2. We have 2 blue dots. That's telling me there's 20 to 30 contracts in one order, and there's 2 of them. So that's by 40 to 60 contracts. You had persistent buying. You had a large buyer of 30 or more contracts right there. And once we break this, what I'm thinking is if we break that, we could come up here and test this area right here. That is what I would be thinking. So what you would do is you would get in right here on the break of that candle, or you can get in on the open. Sometimes when the imbalance area is like in the middle, I might get in, and then if it moves back down, I'll get in again. Now if it breaks, I got to get completely out because I'm wrong. And then you can kind of ride it up here. Once you start seeing these sellers right here, like if you're in 2 contracts and it moves up to here, and you're 14, let's say you're 15 points, let's say you got 2 contracts, sell 1, move to a break even. If you moved to a break even, you would have been right here and you wouldn't have gotten touched. This one you took, it came pretty close to your break even, and then of course we kind of moved up. So let's keep playing this and let's see what happens. These sellers right here are going to be underwater. They're taking some heat in this consolidation area. They're taking some heat. So they're going to cover because you got 1, 2, 3, 4. You've got 4 large buyers. You got 4 large buyers right there. So these guys, more than likely, these 3 large buyers right here, these 3 large buy orders, more than likely, they went on ahead and covered right here, and that's what gave you the pop. More than likely. I'm just assuming. Then you had 1, 2, 3, 4 large buyers in this whole consolidation area. Now we're consolidating, and then I see this right here with this right here, double stacked buy and balance, large buyer, large buyer, large buyer, large buyer, large. There's 5 large buyers and 3 right there. That's telling me, do I really want to short and probably write it down? No. What I'm looking for is a large buyer to come in and push the market up, and we break this this little auction area that we're going through right now. Let's go ahead and keep playing this. We have a large buyer, so it looks like we're breaking through. And possibly what you want to do, this is what you want to do in a situation like this. Okay, this was support right here. You had 4 large buyers that come in. You had a large seller right there. Then you had some persistent selling right here. This persistent selling, they aggressively started moving down. Every tick they added sell, 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 and they try to push it down. Then you had another large buyer come in here, persistent buying, trying to move it up. this right here, if I can get this right here, once we start breaking this right here, that seller, once we're up here, and these institutions are looking at the orders going through. They're looking at order flow, and they're looking at persistent buying. They see a large buyer, they see large buyer, and we start breaking this area right here. Uh, they've got to cover. They've got to cover. They got to get out. And then of course they got out and we tested this area right up in here. Now we had that large seller step in. It could have been this institution right here. We don't know. Could have been the same seller. We have no idea. But as you can see, once we broke that high right there, and then we got that little squeeze right there. Whoops. Once we got that little squeeze right there, and we broke that, and we started testing this area, that's an 80-point move. Now, how much heat would you have taken possibly if you would have gotten in right here? You possibly would have came in here and taken about 20 points of heat, about $400 to make about 1,600. That's pretty good. And then you had right here, you had another double stacked buy imbalance. So what you could do is then get in here. What you can do is get in here, come up here. You're already about 40 points in the money. You see a double stacked buy right there. What you can do is go ahead and add to a winner, and then go ahead and try to get yourself some more money. That's how it's played. Now let's keep going through this, and let's see if we have a large seller. Of course, they're going to defend that area, and all those sellers right there, all those sellers right here, they're probably taking profits up in here. All these sellers right here, when we start breaking that area, yeah, that's we're breaking through resistance, and it looks like they kind of stepped in and kind of pushed it down. But as you can see right here, resistance, we kind of chopped around a little bit. If you're coming up here and you see that large buyer, and then all of a sudden it pops up, you see persistent buy-in, and we drift down, you see a large seller, cut the trade, take your profits, move on, look for another trade. Right here, double stacked buy and balance of 5 times more buyers than sellers, and we got a double stacked area right there. That is 8 ticks of 5 times more buying than selling right there. Because remember, one line, it has to be a one whole point of a stacked imbalance. 4 stacks equals one line right here. And then that right there, we came back down to it and we bounced off of it and ran up. Now, what you can do is if you come down to this area and you see a buyer, once we start moving up, you can go ahead and get in, and your stop is right here. So your stop is about 15 points. And then if you want to, you get in. And once you start running up, and then all of a sudden you see that persistent buy-in, but we're not moving up, we closed below it, then you got this red candle, you want to get out. Take about 10, 20 points and move on. Just get out. The move's over. Base hits, people, base hits. You got to have your base hits. And that persistent ticks will show up in real time as the candle is forming, just like the buy and sell bubbles right here for the big trades. Now, the imbalance areas are not showing in real time. It has to close and then they show up, because so many times I found that if I do it in real time and they show up, that they just kind of get traded down through, and it's just kind of like I just wait until the bar closes to actually get it. Are there true stacked imbalance for that? In the future, I can do a setting if you want real time stacked imbalance. I will do that. Right now, it's just when the bar closes, it will show up. So that's all I have. Go ahead and play around with it and just give me some of the feedback. Thank you very much. Bye.